Hello everyone, welcome to this property market update for Bundaberg in April 2023. We're a quarter way through the year now, and I thought it's worthwhile taking a look at what's happened in the area over the last 4 months in Bundaberg. We actually did a property market update back in December, so a lot of the information we will be referring to in this market update will be in comparison to when we last did our analysis in December. So I'm keen to dive in, guys, but if you are a home buyer or investor and you're figuring out whether or not you should try to buy right now, or you just want to understand what's going on in the marketplace, and you're going to get a ton of value out of what's going to be covered here today. Stick around, guys. So this market update is proudly brought to you by Capricorn Life Buyers Agency. My name is Troy Bassini, owner and head of research. And we are a buyer's agency. So if you are a home buyer or investor and you are someone that needs help navigating this market, you don't understand the area, you don't understand the price trends, you don't know the better suburbs to invest, you don't know what the assets are in the area that are going to outperform. If you're just someone that needs help and are having a difficult time right now trying to buy property in the area, feel free to reach out to me and my office here. We're based in Rocky, Mackay and Bundaberg, and we buy a lot of property in these areas. You can check us out on our socials, visit our website, all our details are there. Thank you, guys. So this is a very data-driven property market update. So what we like to do is use various data points to break down and analyze what's going on in the marketplace, because numbers don't lie, and it gives us really good insight to really understand what the data is telling us, and in turn we'll be able to interpret that and understand its trends and try and diagnose what's going on, and then try to predict what might be likely to happen as well by looking at the data in its full. But for those that have watched these market updates before know that the data we like to look at is a range of different factors on the supply side, on the demand side. So we're going to break down basically what's happening with the median house price and how that's looked over the last 4 months. We're going to deep dive into what's happening on the supply side, look at those stock levels and listing volumes. We're going to have a look at what's been happening on the supply side around days on market, vendor discounting rates, absorption rates. So you're going to get a really good idea of what's happening on the supply side, what's happening on the demand side, and then we'd be able to sort of diagnose and understand what's going on in this marketplace by looking at those two fundamentals of demand and supply. And if you are an investor, you're going to get some good insight as to what's happening also on the rental side of things. And then I usually finish off at the end with a summary of what's going on and try and break down in layman's terms some key takeaways for you guys to help you navigate the marketplace. All right, let's start off with the median house price and what's been happening over the last 4 months in Bundaberg. So we can see here that the median house price in Bundaberg as of April 2023 is currently sitting at $508,000, and it's actually up from $494,000 in December 2022. So the median house price has essentially grown by 2.8% in the last 4 months. So you can see here that certainly over the last 24 months, Bundaberg has gone through a very steep incline in terms of its property price growth. Much like most parts of the country, we've seen a very aggressive price appreciation here over a very short period of time. And as you can see there, it's sort of now starting to flatline or stabilize a little bit, but it's certainly up over the last 4 months from $494,000, which correlates to 2.8%. And that's very interesting to know that it's a market that, despite what's been happening of late, particularly in the property sector around inflation and rising interest rates, exacerbated property prices when it comes to new builds, that the market is still growing. We have a Bundaberg property market where the median house price is still growing, and that is very good to know. And if you are an investor, it's also good to know that you're entering into a market that's still growing here, that's not going through a retraction, because we've certainly seen other markets around Australia go through a retraction, and I know many of them are starting to bounce back now, but Bundaberg has not went through this retraction like much of these other markets around Australia. I always say this though, I don't have a crystal ball, so I don't really know where this median house price is likely to go anyone who does have a crystal ball would certainly be able to tell you, but I don't have a crystal ball, so here we don't like to make any real assumptions or predictions as to what might happen here. All we can really look at is the data around supply and demand, and then try and anticipate what might happen. But to give you a really good, accurate prediction around where this median house price is likely to go over the short, medium, and long term, it's very hard to gauge, and it's very difficult for any analyst to do that. But overall, the market is rising in Bundaberg, and this is despite a lot of those headwinds that we've seen in the property market pertaining to what's been happening on the supply side around finance, access to finance, and then inflation as well. And then obviously that shifts the overall sentiment in the property market as people get a distaste for property and rather remove themselves from the transaction. They sit on the sidelines and wait. But here in Bundaberg, the great thing about it, we haven't seen this market go through a retraction, so it's still on the up in Bundaberg. We can see here from the supply side of things now, if we take a look at what's been going on the supply side, because we want to really try and understand what the supply looks like and then what does demand look like, and then try and understand where this median house price or this market is likely to go. But we can see here that from a stock point of view, stock levels are sitting at 0.35%, which means that there are approximately 182 houses currently listed for sale in April, and it's been slowly rising over the last 4 months. So if we actually look at this graph here, we can see here that it was as low as 0.2%, which translates to roughly around 100 houses available around that December period, and it's been slowly rising over the last 4 months. I think that's, when you look at that overall, when you have inventory that's been slowly rising, not inventory, stock levels that have been rising over the last 4 months, if you actually look at it where it is in relation to the time of year, it's probably a natural thing that stock usually increases after the December and November period, as many of the people that want to sell at this particular time don't sell, because that is sort of a tricky time to sell. It's a time of the year when stock as a whole is rather low, and if you actually compare that to some of these other periods throughout 2021, 2022, you can actually see that there have been peaks and troughs at similar times to when we've had the festive periods. But over the last 4 months, we've seen that incline. So a lot of people now in and around Bundaberg are going, yep, I think it's time to sell now. So many people are putting their properties back on the market, and we've seen these listing volumes increase. I've got to have a look at the supply pipeline, but there's not a direct correlation with the increase in stock levels to new supply. There's not been a whole lot of new supply in Bundaberg, unfortunately. Just like most parts of the country, supply is very grim. So this stock level, I think, is just existing homeowners in the area in established dwellings that are now selling their properties. The market, in fact, hasn't been injected here with a whole bunch of new supply to take that from 0.2% to 0.3% overall, equating for roughly 80 houses. That's not been the case here. But to see that incrementally rise over the last 4 months is probably something to watch now if you are an investor or an active home buyer right now. If that continues to rise, then we know that you're probably going to be in a situation here where you're going to have a lot of choice. So there'll be a lot of opportunity here to buy something that fits your brief, but in addition to that, 1, 2, or 3 other properties might even fit your brief as well, because supply isn't as tight now. You were starting to see really healthy listing volume start to come back, and that in turn will give you as a buyer some choice if you're an investor or home buyer, which is very good. But yeah, something to keep an eye on, guys. But overall, from a stock level point of view, when you start to benchmark that 0.3% against Bundaberg as a whole, like it's got over 80,000 people as a population base, a lot of people moving into the area all the time, really robust economy that's kicking along right now, creating a lot of jobs. So at any given time, to have the best part of 0.3% of its stock available for purchase is still on the very skinny end here, guys. All right, from an inventory point of view, we can see that those stock levels correlate to roughly around 1 month, and it's actually been slowly rising over the last 1 month. So that is an exact correlation to the previous graph we looked at there. You can see that as the stock levels as the listing volumes and stock levels have increased, so has the inventory pool over the last 4 months. So there's been a direct correlation to this increase in inventory to the increase in stock levels over the last 4 months, which is okay to see, but we actually probably know when you have that increase, and this is too early to diagnose, but this is just my initial thinking based on those two different data sets I've seen here. So we've seen the increase in listing volumes from 0.2% to 0.3%, and we haven't seen retraction in the inventory pool. So we've actually seen an increase here in the inventory pool. So this probably suggests to me, or shows early signs that demand hasn't really eaten up that new supply that's come onto the market. Otherwise we would have continue to see that inventory pool retract there. But when you start to see that inventory pool expand out, we generally know that inventory pool is building and building as the new stock come onto the market, is building and building, and not all of it is being consumed by the demand of the marketplace. But this is an early analysis here, guys, but it's good to know that inventory pool is showing those signs, early signs, that we might be entering into a market here now that is potentially slowing down. But when you look at it in the grand scheme of things, to have under 1 month's worth of supply, basically to say if the market were to go into redundancy tomorrow, you'd have only 1 month's worth of supply, is still a very healthy marketplace here in terms of the level of supply that's available. It's very healthy, but healthy from an investment point of view, as in like there's still a lot of opportunity here where I'd say demand exceeds supply, but we're maybe starting to see, signs that demand is maybe starting to taper off a little bit here. So early signs of, but overall 1 month's worth of supply in a place like Bundaberg, it's still very low in the grand scheme of things, and it's still a good market if you're an investor to play around in as well. If we looked now over at the demand side and see what's going on the demand side in Bundy, we can see here that Bundaberg December days on market this is meant to be Bundaberg April days on market sit at 54 and increasing after a slight jump in the past 2 months. And in addition to that, vendor discounting appears to be slightly rising also. So we can see here that it has, the overall days on market has been a slight jump from a slight decrease actually from the 2 previous months. Not a slight jump, it's actually a slight decrease. So we can see here that days on market in January and February even sat at around 60 and 70 days, but you can see the overall trend sat certainly under 60 days for a very long period of time there. And those two data sets there for January and February could have easily been skewed there by a couple of sales that have sat on the market for a very long time that has skewed that days on market metric up to as high as 70 days. And we can actually see here that the April period is now back to 54, which is aligned to the overall trend. So I'd say that I've totally ignored what's happened in January and February and actually look at that long-term trend at around 54, which is really healthy as a days on market metric. That just goes to show that properties are taking roughly around 2 weeks to sell. I'd say 14 days to sell overall in Bundaberg. However, you always have to remember that this is the overall average in a marketplace. There'd certainly be properties moving really, really fast. And I know, particularly on the Bundaberg coastline, stock is very limited and the velocity of those good properties coming on is very low. So they tend to sell a lot quicker than the first 2 weeks, generally even a couple of days. So you have to always be mindful that there are markets within markets, and this is the overall aggregate here for 54 for the overall market, but there'd be suburbs within Bundaberg, like your Bagaras, your Inns Park, your Burnett Heads, your Avokas, all trending very low, much lower than 54. I'd say right now, if you did pluck out those individual suburbs and looked at their days on market trend, I reckon they'd be all sitting very much below 54. And we can see here from a vendor discounting point of view, it appears to be slightly rising. So when you have rising vendor discounting rates, it's probably something to keep an eye on overall. That just means that the properties that are coming onto the market in and around Bundaberg, the vendors are slightly discounting them in order to transact. So a property might go on the market for $550 and end up selling for $530. Overall with this, we can actually see here that it has risen. So a lot of properties are discounted to sell now, which suggests that a lot of properties that do come into the market, there isn't this frenzy of a lot of people offering over in order to get the deal done. They're actually having now to discount in order to get the deal done. So we may not be in a market anymore in Bundaberg where it was 18 or 24 months ago, where it was an absolute frenzy. Something would come online in Bagara for $550 and end up selling for $610. It's certainly not the case now. However, as I said, markets within markets, every house, you have to treat it on its own merit, and every house or every suburb will have their own different demand drivers right now. But overall, what it's saying here is that the average property in the marketplace is discounting for around 3%. So if you are an active investor out there and you're trying to negotiate or home buyer, then you generally know that there's a 3% buffer there you could potentially play with. And I'd be looking at properties that have been sitting on the market for, I'd say, longer than 30 days or longer than a couple of weeks, and there's been multiple open homes and it hasn't sold. Those would be the properties I'd be targeting. It's the ones that have been sitting on the market for longer than 30 days or had multiple open homes and no offers. And I'd take a stab at those and offer certainly under 3% of that asking price and see how those negotiations play out from there. So that's what's happening in terms of days on market and vendor discounting in Bundaberg. On the demand side, we can also see here that online search interest rates currently sit at 1,160 views, and it's actually down from 1,740 views in December, or it's actually down overall 33%. So those online search interest views have really fallen off a cliff there by 33%, which is very interesting. And the online search interest rates is a really good metric to see what's happening online in terms of the search activity on domain and realestate.com. And for that to certainly fall off a cliff over the last 4 months is very interesting. I know there's certainly been a lot of people that have borrowing capacities have eroded away. They've decided to put things on hold. Interest rates have scared people. There's been a lot going on in the sector where a lot of people, certainly from the demand side of things, aren't as active right now, and this is certainly a reflection of that. But for it to drop the best part of 33% as a trend over the last 4 months is something to be mindful of. So if you are, I say, an investor and you're banking on buying something in the Bundy area, that is slightly alarming a little bit when those online search interest rates have dropped off a cliff. But actually, if you do benchmark it relative to the state average, it's actually still pretty healthy and pretty good. But that demand has certainly fallen off a cliff there. And if that trend continues to go down, then we might maybe starting to see a market here where demand is maybe starting to really slow down. But in saying that, there are still a lot of window shoppers online as well that use realestate.com or domain, and a lot of people that are geo challenged or aren't logistically ready to transact now that are always looking. But yeah, 33% just goes to show that right now demand from an online search interest point of view anyway is quite alarming. But in saying that as a metric, when you start to benchmark that across what's the average online search interest rate for other parts of Queensland, it's still very high and very healthy. So it's an area still in very strong demand. But it's certainly the lowest it's been since Q1 2021. So yeah, very low, and it's come off a bit of a high there over the last 5 months. It's done really well over 1.6 for a long time, and now down to 1.1, which is certainly fallen off a cliff. But something to keep an eye on, guys, if you are an investor or home buyer. From a home buying point of view, you probably know that's probably a good thing. If you are an active home buyer, and there are less competition as well to compete with other people, so that's also a good pro about seeing these online search rates drop off a cliff, particularly if you're planning to get into the marketplace soon. You're going to be potentially in a marketplace here where there's a lot less competition. Alright, now if we were to summarize basically the overall demand side of things, and the way we do that is actually looking at the absorption rates, and all the absorption rates is out of the total sales or the total listings, what percentage of those have sold, and they give us an overall percentage so we can actually see and measure the market absorption rate. And we can see here that overall for Bundaberg, it's experiencing a healthy absorption rate of 70% from December 2022 to March 2023. And it's actually down though from 94% during September to December 2022. So the overall absorption rate sitting at 70% is still very healthy, but for it to sort of drop by the best part of, I'd say, 24% since December, that's interesting to know that that absorption rate has tapered off there and reduced off a really high 94%, which basically said that basically all the properties that are going on the market have sold during that period, which was really high, but now the market's starting to rebalance itself back to down to 70%, which is still very high, and it's still a very healthy figure. And actually, if we looked at that, what that looked like from December 2022 to April 2023, we had a total of 331 sales. This was from 472 listings in total, resulting in a 70% absorption rate overall for Bundaberg. So yeah, as I said, coming down from 94, which was very high in a very difficult market to operate in when 94% of the properties are transacting, down to now 70, which is still very healthy. Went from basically a really crazy frenzy of 94 down to around 70%, which is really stable and healthy. Basically anything above 60 is a really stable and healthy market that's transacting well. Once you start to move up into the 85s to 90s, then you're moving into a very high demand area. So it's a trend if you are an investor and you're wondering whether or not Bundaberg still has some steam in it, or if it's still a hot market that might continue to grow. That absorption rate, if it continues to go down and down, we might start to see that median house price slow down, stabilize, even retract. So if you're an investor, I'd be certainly keeping an eye on that absorption rate, and I'll be doing another market update anyway in another couple of months, so you'll be able to sort of see even that trend from basically April to June once we break that down as well. And if that absorption rate goes from 70%, let's say, down to 50%, then we're certainly seeing demand really slow down. When demand slows down, stock levels and supply levels are consistent and the absorption rate isn't as high, that means that vendor discounting goes up, days on market goes up. And then when vendor discounting goes up, then most people are offering under what a property is listing for. And then in turn, if there's multiple transactions where people are offering a lot less than what the property is listed for, then that's obviously going to drag down that median house price over the longer term. Alright, now from a rental side of things, we can see here that Bundaberg, the median rent currently sits at $404 per week, and this is for houses in Bundaberg, and it's actually up $2 or 2.5% since December 2022. So there's only been a small increase there in the overall rent for Bundaberg, but it is still a growing rental market here. And by the looks of things, there hasn't been a lot of rental stock available. Usually when you have a whole bunch of new supply that's met with demand, and all of those prices have been market-based prices, and you generally get that median rent to soar a little bit higher. But I think what's really restricted this median rent from growing over the last 4 months is that volume of rental supply onto the market, because that vacancy rate is still very low, and we'll get to that in a second. Yet we haven't really seen that vacancy rate still correlate to higher price appreciation over the last 4 months. But yeah, for it to grow $2 over the last 4 months is still good. If you extrapolate that out over a 12-month period, 2 times 4, the market is still growing at around $10 per annum right now. If you were to extrapolate that and use that as a metric to forecast what your rents might look like in 12 months, it's still low. But in saying that, I believe there's not been a lot of additional listing volume in terms of rents to then meet that market demand and that market demand rent in order to drive up this median rent. But yeah, we'll have to see how this one plays out over the next couple of months, guys, for sure. You can see here, yep, vacancy rates at 0.6%, so still a very tight market here in Bundaberg, and it's actually still been on the decline for the last 4 months. So it looked like it peaked around probably say September last year, October 2022. It peaked at around 1.5% or 1.1%, and then certainly over the last 5 months, it's now sort of dropped way back down to similar levels at around 2001, where it's well under 0.7%. So when you look at it, like overall, for that vacancy rate to go from 0.6 to 0.4 from 1% to 0.8, there's not a great deal of properties there that skews this data. So the difference between, let's say, 0.6% and a 1% vacancy rate would be only the best part of 15 properties. It would be only 15 properties in the Bundaberg market. So like that isn't a whole lot of stock as a whole, and for that vacancy rate to be skewed slightly, it doesn't take much to skew that, but it wouldn't be something that I'd be too concerned about if I was an investor looking at those vacancy rates, because there's not a whole bunch of new supply that's coming onto the market that's really going to skew this metric way out to let's say over 1%. I can't see that happening anytime soon, that's for sure. But yeah, if you're an investor, you're going to get a healthy rental yield here for sure, and you're going to be getting a property where there's going to be a lot of people putting their applications forward for, and you're very likely to get a tenant paying really good market-based rent here, guys. So I wouldn't be too deterred if you're an investor of these vacancy rates, because they're really solid and really, really low, and it's a really good market to get premium rents right now and good cash flow. All right, if we poked our head over now and looked at what the future supply pipeline looked like, and we've seen the listing volumes and inventory levels sort of creep up, and we've seen the demand not really meet that existing supply right now, but we've also seen a median house price that's sort of stabilized and slightly grown. But if the market is injected with a whole bunch of new supply, that could totally throw the market balance off right now, and potentially might start to even see that median house price taper off or retract. But who knows what the supply might look like. But we can see here that there's been a total of 271 building approvals for the year to date for the 2022 to 2023 financial year currently, despite a 51% increase since December. It's trending low relative to previous years. So what is this telling us? So if we actually looked at the 271 building approvals for Bundaberg from 2022 to 2023 financial year, we can see that it's certainly very low relative to previous years, and it's actually up 51% from December in building approvals. However, is that enough to move the dial on the supply side? There's not. I don't think that's going to move the dial. So we're at 271 building approvals now. Over the 2021-2022 periods, it averaged over 600 building approvals, but before that it sort of sat at around 350, 400. We've got, what have we got now? 3 or 4 months left of this financial year. It might meet the long-term average, I'd say, getting close to maybe 350 building approvals by the end of this financial year, which goes back to that long-term average between basically 2013 to 2020, I'd say. And then there's been obviously a big increase over the last 3 years, particularly 2021 and 2022 period, where it's sat over 600. So yeah, that's going to be interesting to keep an eye on those building approvals. But in saying that, these building approvals, if you are an investor, I wouldn't be too concerned about these, because right now, like the current year-to-date approvals, I'd be more concerned about what's happened in 2021 and 2022. Those 600 approvals, or close to 600, just over 600 approvals, should be coming onto the market very soon, because these are approvals here. Usually it takes the best part of 2 to 3 years after an approval is done for stock to come onto the marketplace. But then even getting future stock in the marketplace right now is very difficult, as a lot of builders are having a lot of trouble getting materials into the country, getting people to purchase new house and land packages. So that in itself, this whole building sector right now is really hurting. And despite these approvals being okay year to date, getting that to translate into stock is a totally different question. And whether or not that would happen, I don't know. We've seen a lot of house and land packages still being sold at very premium prices on the East Coast and the inner west and inner east of Bundaberg. However, in terms of the velocity of them coming online, there's not a whole lot of big volume builders in the area. That's still going to be a very slow burn in terms of that supply coming onto the market in Bundaberg. Oh, alright, that could have been a lot to swallow, guys. As an update, do cover a lot of ground there in terms of diving into the supply side and the demand side. But if you're an investor or home buyer, you're going to hopefully you got some value out of that, guys. But if I were to summarize basically some of the key takeaways for you from that, so from a supply point of view, we can see that supply has certainly increased when we've seen that with those listing volumes over the last 4 months and the inventory pool increase. From the demand side, we've seen those absorption rates decrease, and we've seen the online search interest rates decrease. We've seen basically the days on market metric basically go back to the long-term average, which is okay. And then we've seen those vendor discounting rates jump as well. So that suggests to me that supply has gone up, demand has gone down, and we've then saw a median house price that has slightly moved, but it's stable and hasn't really done what it's done previously, made those huge increases of, I'd say, the best part of 4 or 5% over a 4-month period. So it is a market that's sort of stabilizing and slowing down. From a rental point of view, the market is still very tight, sitting under 1%. It's a big national crisis, and in Bundaberg it's no different. The rental market's still very tight, and if you're an investor, you're going to get a really good, healthy rental premium here, no doubt, and you'll definitely get a property rented if you plan to buy an asset in this marketplace. Future supply does look grim, and yeah, if you do look at that future supply pipeline, particularly when you start to then marry those approvals to the building sector and what's going on there, doesn't look good, because the building sector and getting that velocity of supply translating from approvals to actual turnkey products, there's a bit of a disconnect between the two right now, and that's no different to certainly other parts of the country. So when that's the case, when you don't have that marketplace injected with a whole bunch of new supply, that's going to certainly continue to put downward pressure on the existing stock in the area. So particularly investors, there's a good opportunity there to buy an established dwelling in Bundaberg and sit on it, and when the marketplace isn't injected with the new supply, obviously the people are going to line up for the established dwellings, and the established dwellings prices are going to appreciate because there's just not a whole lot of supply there to keep up with that demand. But we've seen demand fall off a cliff a little bit here, so we're in a bit of a weird time, and I will be doing another market update in and around June as well to sort of see where that demand is going to go and where it's going, and then that median house price. Certainly from a, I suppose, overall diagnosis of the marketplace, I think Bundaberg, I'd say, is a balanced market right now. It's a balanced market. It's not a complete buying frenzy out there right now. I think a lot of buyers have choice. I think a lot of people that are selling right now, their properties aren't moving as fast and aren't selling at premium prices. Obviously there are particular properties that would and do and are still doing that right now, but I think that's the exception right now, not the rule in the marketplace, certainly in Bundaberg. But I'd say the market is certainly balanced out now. So if you are an active buyer in the area, you have a better likelihood now of potentially skewing a deal in your favor, whether it's certainly price. I'd be pushing for price, but you'd certainly have some negotiating leverages there, and I'd certainly be targeting those properties that have been sitting on the market for longer than 30 days or more, you have certainly now some wiggle room to negotiate, that's for sure, in a more balanced market and not a complete buying frenzy out there. So guys, I hope you got some value from that. My name is Troy Simbassini. I am the owner and head of research of Capricorn Life Buyers Agency. We do help buyers in the area navigate this marketplace. You can visit us on our socials, visit us on our website, or book in a discovery call and have a chat. More than happy to figure out if we might be able to add value to you buying your next home or investment in the area. Thank you guys, and bye for now.